Yeah, so hi guys, welcome back to my YouTube channel. It's your favorite guy Stan here. Um, Today I decided to make a little bit of different analysis on different. I decided to make a little bit of changes in my analysis, not analyzing the regular pair just like as usual. We can usually analyze AUD, USD currencies and indices. So today I decided to analyze a bit of a different asset altogether. So I know some of you guys don't usually trade S&P 500, and then I decided to make analysis on S&P 500 today. So for some guys who usually invest in this asset, it's a good way to go. So let me just make a little bit recap. This is my high and low. The psychology behind these highs and lows is that once price comes to this level, it takes out a certain liquidity of the past highs. Okay, and then price came to this low, taking out liquidity from this level. Now liquidity is sitting at this junction now. So this is the impulsive leg now. It's we just take what's the high here? This is the high. Liquidity is sitting here now. Liquidity is sitting here, and then we'll go for what happened. How did this happen? This is it. There was a certain liquidity sitting at this level. Price came, took it out, and then the liquidity is sitting here now. They have to go back in to collect liquidity in form of energy, kinetic energy, in order to accelerate above. For those of you who did physics, it's a different story altogether. So going over to the 4 hour time frame, we are looking forward to getting a 1 to 3 structure liquidity grab. Most of you who are trading SMC, you can also learn from this because most of the SMC trading concepts are not detailed. They are not detailed. So if you watch, most of the SMC traders are not that making good profit from the market because they keep on getting stopped out. So this is it. One, two, three. That is it. 1 to 3 structure. We look for liquidity grabs. At the third leg, which is the third touch, we look for liquidity grabs. The same thing, you have to analyze the same 1 to 3 structure from the higher time frame to the lower time frame in order to get a very good entry. Because if I should decide to enter the third entry here, at the third touch here, I'm going to price is going to trickle here, causing my emotions to rise, and my stop loss is very huge. So, but if I have this on the 5 minute or 15 minutes time frame, I don't have to fear because if this is coming down, I know I'm risking 1%, and at the same time, before it reaches here, see market reversed, and now it's going to my TP target. So at here now, I have to go over to the H4 time frame. Let's analyze the H4 time frame. Guys, one thing about trading is 90% of the time is your analysis. You have to analyze 90% of the time, and then 10% of the time is your entries. Your entries, you have to enter aggressively. When I mean aggressively, you don't have to enter like, okay, not putting in your risk management. No, no, no. You just have to enter aggressively in the sense that you have to enter when the market gives you opportunity, scaling, 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 continuously scaling until you get what you want out of the market. So that is it, guys. Um, we are just analyzing now. This is the height here. Liquidity is sitting here, sitting here. I just want you guys to take note of these things. Sitting here and also sitting here. Market came here from this junction, grab liquidity at this point. What we have to check is how did it grab the liquidity? It grabbed it impulsively. So, and it came here collectively, showing you that it wants to continuously go up. Then it came here, broke this level, grab the liquidity at this sitting here. Liquidity sitting here, okay? I will just make my charts clean. So now, as price has already grabbed the liquidity sitting here, this is where the liquidity is sitting now. It's part of the body now. Liquidity is part of this impulsive leg. It's part of this price movement now. What when I mean liquidity sitting at this junction is part of this price movement now. Okay, increasing the acceleration. So, what are we looking for now? We are looking for price to pull back and then grab the liquidity sitting at the below. joint in order to continuously move up. So we are looking forward to price doing this, then buy. It's not a must it must do that, but just know that price is coming back after it creates this high. This was the initial high, it created another high. Price has to come back to grab liquidity below, sitting below, in order to go up. Okay, so going over to the lesser time frame, we have to see something like this. Another thing like this can also as well occur. Sorry. I want you guys to take note of this. This is this is a key reversal areas here. Market can choose to reverse at these areas now. So what happens? We have to wait for the market to act before we react. So this is a 1 to 3 structure now. One, sorry guys, this is a 1, 2, 3, 3. Thanks you. All right. We're looking for 1 to 3 structure. Immediately we get the 1 to 3 structure at this level now. Once it gives us a 1 to 3 structure, we go for buys. So guys, that is it. So coming to the support and resistance traders, guys, it also applies the same. But if you're trading support and resistance, you should also keep in mind about how the big money traders, big banks trade. They don't just buy into the market continuously, buy. No, sometimes the market gets overbought and they have to go back to collect liquidity to make what they were. What I mean by liquidity is that they have to go back to tag some people out of the trade, to tag some people out of the trend, out of the impulsive trend. Okay, so just look at this. Price can do this, and then come below because this is the initial high here. Come below to take liquidity from this junction, and then go up. So maybe they have the tools, the accessories to check when they have already grabbed liquidity. Once price comes to this low, it gives them a signal that we are already buying. Once they break a certain low, they'll just try to add in more prices. Okay, maybe at this junction here now they are trying to add buys, but they are saying orders are invalid because there is no space for putting in more orders, or maybe there is the market is already overbought, so they have to go below, tag so many people out of the trade. And how they usually know is because they once they pull out, they know that this is a low and people entered here and then market went up, so they have to tag these people out, and then they add price. Once they tag these people out, they add buys. Once they see that market is giving them like their orders are getting filled, they will, okay, no problem, decide to continue the trend. But once they tag out this low, give me 1 minute. Once they tag out this low and go for buys and the orders are still invalid, you notice something like this because they have already kicked out of the market. That's why you'll be noticing something like this, and then they will have to sell again, tagging out another low. Are you getting the point now? And then what happens? They'll put buys, and once they put buys, they get a very neat impulsive leg. This happens again. Ah, then which means they are already done. They already grabbed the necessary liquidity. They've already taxed people out and then entered more into the market in order to take out this high. In order to take out this high here now. So let's look at the first liquidity here. Look at the second liquidity sitting here now. For some people who are trading support and resistances, this is a support level. But one thing there is that you might be looking to take the trade from here, and the market pulls in all the way to here. I getting the point. Once the market pulls in, you'll be confused and then you'll be losing money. See what is the market is doing like this. You go buy again once it's doing like it's going up, once it's acting like it wants to go up, you buy again and the market goes down until it grabs liquidity sitting here. That's the psychology behind big banks, market traders. Okay, so if you don't know this and you're trading support and resistance, my dear, I believe you'll be losing a lot of money now. So that is it for S&P 500. For those trading S&P 500, it's a sure way to go. For those investing into S&P 500, it's a good stock.